Good afternoon. Welcome to GrainTV. I'm Kevin McNew. To my right, Brock Chimino. We started Monday on a positive note with Egypt stepping in and buying U.S. wheat for the first time since April. But that didn't carry us all the way through, did it, Brock? We ended a little weaker, didn't we?
No, as soon as the pit opened, we really saw the markets kind of head south. Corn did end up the day positive, though, 2.5 cents up in Chicago. Soybeans up 15.5 cents. Wheat, we did lose a couple cents on wheat, even though we did see those nice sales to Egypt. Kansas City was off about 7 cents, and Chicago was down about 3.5 cents this morning.
Yeah, beans were the leader to the upside. More weather problems, right, in South America?
Yeah, really, soybeans in South America are starting to become a concern. Ag Rural out of Brazil came out and said that 83% of the crop is planted right now. Usually we're about 93%, so we're a little bit behind there. I think some dry weather in southern Brazil and some wetter than anticipated weather in Argentina is really the driving force behind us being behind on our pace to plant.
I think beans also got a boost from news of China sniffing around for some pretty serious bean purchases in the coming weeks. So we'll see if that materializes going forward. But in terms of export business, we sort of came out with some pretty disappointing numbers here today.
You know, we did miss the mark on soybeans and corn. Wheat actually exceeded expectations, and that doesn't even factor in the Egypt sales that we saw today. We'll see those in subsequent weeks. But if we take a look at this chart that we've been following all marketing year long, the green line is what we should be expecting for sales given seasonalities, inspections of exports given seasonalities. The red bars are what we actually are seeing. On this soybean chart, you can see that we did meet our expectations, but analysts had a little bit higher expectations, so we did miss the market's analysts' expectations for this week in export inspections. We are still 184 million bushels ahead of pace, and we gained about 7 million bushels this week. So pretty good overall for soybeans, even though we were a little bit lower than what analysts were expecting this week. If we take a look at corn, we kind of know this picture. We've been following this all season long. We are well behind on exports of corn right now, about 52 million bushels behind pace, and we fell about 12 million bushels again this week. So we continue to see those terrible sales really in the corn market.
Yeah, 50 million bushels behind pace on corn. When we look at ethanol, we're thinking 100 to 150 million bushels behind pace on ethanol. So, you're looking at potential 200 million bushels of higher stocks if these numbers continue to dictate throughout the marketing year. I'm really concerned about other factors in the corn market, not only the demand side, but also the transportation sector. Obviously, really a lot of uncertainty about the barge situation. The river has come to a very low level. There is a significant risk in the next week that river market will be shut down, which obviously would be detrimental for moving grain. The other thing I think is, the physical cliff policy issues. Those are apparently not going to be resolved easily like we thought a week ago. So I think there's a lot of uncertainty about that, which, wouldn't you say, Brock, is bad news for the grain?
I think it really is. Initially I think we'll see some money being pulled out of the equities given the fiscal cliff issues that we're seeing. I think that'll fall over into the commodities, probably see some money going to safe haven assets like dollar index or gold. But if I'm a producer and I'm looking towards the end of the year, what is your thought on what we should be doing to protect ourselves up until the end of the year?
Well, all these factors combined lead me to be looking pretty seriously at some price protection. If you're really worried about the next 3 weeks, going out to the end of this calendar year, which I think there's significant risk with barge issues, with the physical cliff issues, we could see the corn market blow up if both of those things go negative. Look at some January short-dated options. Right now, an at-the-money put option for a 750 put is only 10 cents. Protect yourself for the next 3 weeks. When I look historically at the last 30 years, there's an even money chance that we could just see, just based on normal volatility, we could see 724. And an even 25% probability we could see 708. So if I'm a farmer and I know I got unpriced grain, then I've got to start looking at some options here, because I think the numbers are starting to get pretty negative for corn.
Yeah, I'm right with you. I would definitely take a look at doing something by the end of the year, especially if you don't plan on making any cash sales. You've got to protect yourself. There's too many issues out there right now for corn. That's could lead us to the downside in the next few weeks or so.
Hey, thanks a lot for joining us on GrainTV. Follow us on Twitter, follow us on Facebook, or call us 877-472-4607. Have a great day.